wanted to take a moment to talk about our sponsor, Alt21, the foreign exchange and hedging platform that saves you time and money on cross-border transactions. As a CEO, there are days when my calendar feels like a never-ending cascade of decisions, meetings and problems to solve, days when I can't remember if I've eaten lunch. The last thing I have time to think about is currency exposure. This is where Alt21 can help, by taking the complexity out of foreign exchange. With their FX and hedging platform, you can lock in exchange rates and automate payments, and with their low fees, up to 90% less than competitors, you'll save money while freeing up your time for what really matters. If you want to stop juggling and start focusing on growing your business, head to alt21.com. That's alt21.com to find out more. Hello and welcome to Enter the Boardroom with Nurole, the podcast exploring what makes great boards and board members. I'm your host, Oliver Cummings, CEO of Nurole, the board search specialist and market leader bringing science to the art of board hiring. Today's guest, Charles McManus, is co-founder, Ned and former CEO of ClearBank, the UK's first new clearing bank in more than 250 years, a cloud banking infrastructure that powers fintechs and institutions behind the scenes. During his 9-year tenure as CEO, which ended earlier this year, Charles scaled the platform to more than 250 institutional clients, 13 million end customer accounts, 167 million payments a year, and £112 million in revenues. Charles also co-chairs the Unicorn Council for UK FinTech, the industry forum that liaises directly with the government on scale-up policy, and Ophelia Group, a fintech platform. Before founding ClearBank, Charles was CFO at RBS Ulster Bank Group and CFO for Europe and Asia at Royal Bank of Canada Capital Markets. He was named the 2025 FinTech Leader at the FinTech Awards. Charles, a huge welcome and thank you for being here.
Absolute pleasure. Delighted to be here.
Charles, I'd love to explore the relationship between the board and the CEO during a scale-up with you, given the success that you've had on that journey. And I'd like to start by asking you, what have been the 3 key calls you've got right as a CEO on that scale-up journey that a board member listening can learn from?
First one is strategic focus. When we founded ClearBank back in 2016, there was the likes of Starling and then Monzo came, a number of the neobanks. They were doing retail banking, business banking. They were doing, actually Starling copied ClearBank in relation to doing payments and others. We were very, very clear right from the start. It was all about the best tech, payments and clearing and staying in that lane and space and trying to be the best at it and create the global infrastructure of the clearing bank we've become now in the UK and Europe and hopefully in the US and beyond. So that's what I mean by strategic focus. Lots of debate. And I'm sure we'll talk about in relation to either pivots in strategy or changes or as you go through that startup to scale up. So number one in relation to that. Number two, I would say, remember we were a regulated bank and again, the strap line on ClearBank are the first new clearing bank in 250 years. We had 26 different stakeholders we had to manage in the regulatory world. So in order to become a member of the payment schemes, you needed to be a regulated bank. We hadn't got our banking license, and so the rule books didn't accommodate that scenario. And we got the 26, so all the regulators, the Bank of England, all the relevant parties in one room, and we tried to take them with us, and also the role of our non-exec directors and the board with them to actually get an outcome. I've been regulated all over the world all my life of transparency, integrity, honesty, working with people to achieve an outcome. We would never have done it if we couldn't have built those relationships and coordination and created some goodwill. And the board members also in relation to being flexible and creative in relation to how you navigate through all of that. So certainly in relation to number two, we wouldn't have got a banking license. We essentially wouldn't have got the cooperation to be able to execute. And we certainly wouldn't have got our first customers that were desperate to leave the big four clearing banks to come to us to try something new. The third one, which is not really a sort of surprise, but again, if you're going bank standard to start with of capital and funding. And obviously, since then, I've got to know a lot of entrepreneurs and that the whole funding aspect in relation to keeping the business going and trying to get to profitability. And we raised 25 million to start with, a large number, because we needed the regulatory capital for the bank. And the way that was structured essentially was two parts, but the first part was getting us to the license. And if we got the bank license, then we got the reg cap to then go. But it's having the right investors with the board to actually create your runway. And obviously everyone in relation to loss making has got burn rates and how much cash you've got. I suppose it was the accountant within me and being in banks that if we were going to give this a go, we needed the firepower, we needed the money, we needed the time as a big tech project, but we needed investors that were passionate about disruption and would back it as a complicated IT and regulatory project. We've had the two billionaires have been with us all the way through, although one tragically died. And since then, we brought on, if you like, a proper PE firm, Apex Digital. If you run out of road when you're loss making and you ain't got the cash, it's game over, as we all know. And it's so important to build an infrastructure asset like ours. Takes time, takes a lot of money, but it can be highly valuable if you get it right in the end. So sorry, a long three there, but all three I'm passionate about.
Can we go back to that first one, that strategic focus? I've been very influenced by the work of Roger Martin, who was a guest in episode 62, who talks about the importance of having clarity around your winning aspiration, where will you play, how will you win, what are the capabilities you need in place, and what are the reinforcing, what are the measurements that you'll take. Can you expand on how you achieved that strategic focus and what role the board played in helping you with that?
Yes, and it's, of course, it didn't pan out as the original business plan. Surprise, surprise for a new fintech. What we were clear about and the strategic rationale was, and I did 3 months DD before getting involved in the project, after the lunch with Nick Ogden, who is the serial founder of WorldPay and the rest of it, had the original idea. And of course, it was all of that due diligence in relation to, there used to be 16 clearing banks in the UK, they were down to 4. They were all on legacy technology. The fintech revolution was actually coming. Consumer apps were going to explode. And having a brilliant front end, what about the back end in relation to the payment and actually settlement finality? And if you had a cloud native tech stack, you had APIs, all the tech latest, ISO 20022 for those that are inclined, all of that, light years in terms of the product, real time, everything. And so we started, that was the clearing market. Now, the clearing market in relation to addressing that regulated financial institutions, about 5,500 regulated FIs, including the big 4 and others. So not a massive market, but this was B2B. What changed the world was, it took time and actually volume, et cetera, was along the way, we invented embedded banking with the likes of Tide, where this is where we embed our bank account, FSCS protected bank account, into other regulated EMIs where they use it for their consumers or SMEs. And it was with Tide, the SME app, where they didn't want to become a bank, but wanted a bank product to their end consumers. And we hadn't envisaged that was going to be such an important task. And at the board, we had a massive strategic debate. Should we be doing this? Or should we be going to the market more direct ourselves? And I remember some of the board members, or a particular board member, thought it was commercial suicide. Felt very strongly that it was the wrong direction. And of course, that's good. And to the extent of the board making a decision, a majority or strong majority, and everyone taking accountability for that once you've made the decision. And looking back, we've built an amazing business in servicing some of the UK's finest fintechs, Revolut savings accounts, Chip savings app, Capital on Tap, numerous others that are now using that. And we've got a very big pipeline, and we're now moving into the corporate space in relation to unlocking value through that. The quality of the board's strategic debate. So there was a lot that said, well, hold on a minute, you were meant to be doing clearing only, or really conquering the clearing market, and now you're doing this. And of course, out of embedded banking, you get a whole raft of clearing and payments. So it was another way to leverage it, but actually starting to create diversification within the business. The board role there, obviously in loss-making capital, but executing a business plan. Were we doing the right thing? What were the financials look like? And we were very focused on financials and margin and getting to profitability, as well as having our important vision and purpose, and all of that got to be real. Getting to profitability was very important. And of course, back in 2016, that wasn't the vogue. The vogue was top line customer acquisition and revenue growth, and don't worry about profitability. Well, we never wrote a piece of business at all unless it was profitable. And that was a discipline. And of course, 2 years ago, we got to profitability after sort of 7 years. And that obviously moved in the fintech valuation world and came to us. Whereas at the time, it was very much out of vogue of doing that. But the flexibility, the agility of thinking, and this difference between a founder being passionate and conquering no's and carrying on no matter what, versus recognizing when to pivot, that you have to end up being successful. Really, really important, because founders can become very dogmatic of things not working, of just carrying on blindly, and that's when you need board challenges and the rest, and as much data as you've got and experience to actually sort of really examine that.
Can we move on to talk about that meeting you referred to where you brought together those 26 different stakeholders? I mean, my mind boggles bringing together 26 different stakeholders, never mind when that's the Bank of England and a whole host of regulators and other complex institutions. How on earth did you go about that?
Anyone that understands the banking industry and the payment schemes as they were like cooperatives in where the volume you put through gave you the power and control within the payment schemes. So the big four were putting the majority of volume through the payment schemes, so at the board meetings and the rest, rightly, in terms of them having contribute. And to the extent of new banking licenses at the Bank of England and the Treasury and all of that, and the new world coming, we actually went, I remember Nick writing essentially of, we're thinking of putting up a proposition for a new clearing bank. We don't want any regulatory favours, but is it something you would support? You would actually sort of help us doing? And if you like, we got a series of negative assurance. So I think that's really important on the basis of I don't want to use the word monopoly or control or anything equivalent. But if you're up against something complicated competitively, then you've got to have your own assessment. Have you got a chance of actually getting into the club? So we did that, and on the basis that we didn't get strong no's, we thought, okay, we'll proceed. Like any project, you've got your pathway or product roadmaps or whatever it is of all the various different stages and how you align it. And you need this, and all the interdependencies in that plan are there. And in talkings, we realized we were doing the sort of 1-to-many and 20 telephone conversations or whatever. That actually the only way, like a project team, their extended project team, is get everyone in the room. And we managed to actually put a date, and of course it took us forever, of we'll tell you what's going on. We'll show you the roadmap. We'll show you the role we want you to play, not giving us yeses, but what I'll ask of you. And we'll do that with all of you. And we even flew the CTO because Microsoft was so passionate about us, if you like, building a clearing bank within Azure. When we were convincing the FCA about cloud at the same time, we flew the CTO of Microsoft from Redmond to this meeting. And he did a presentation to all of them on cloud. Well, the FCA were really interested in all of that, and obviously getting a quality speaker like that. So again, I want to say it was enticement, but it wasn't just us getting something out of it. They got something out of it too. It was at that meeting, one of the CEOs put his hand up and said, Charles, has been very interesting. I've met some of my colleagues I've never met before, ever. What do you want from us? I said, well, with an achievement from that, you now know how it works. When you have to step up and do your bit, you do that. He then suggested we turned it into a form of steering committee and actually helped us do it. And that was a pivotal moment because it changed the whole mindset in the room of we're going to get an outcome and go on execution to do this, even though that wasn't a guarantee at that stage. But the others hearing an individual say that made a massive amount of difference. And we didn't realize at the time how important that was. If you like, we were in project management mode to try and just get all the various sequencing together. But it became more than that because actually they were then quite proud of, we were working on the first new clearing bank, 250 years. They took some credit for it. And actually there's a number, the Treasury and others, when they talk about the legislation on new banks, take credit out of, look, Starling, Monzo, ClearBank all came from that legislation. What a wonderful thing we did, which is great too.
So if I play that back to you, it sounds like the playbook you executed there was, first off, laying the ground and getting those negative assurances, then using Phil Redmond as a reason to get excited and bring them together, and then ultimately get them sufficiently excited about the vision that it became their idea almost, where there was an individual who got catalyzed to lead it and then others were following.
What an excellent summary.
Many board members quietly worry whether they're contributing enough. Nurole Plus gives you expert, tailored support to build confidence, refining your value proposition, helping you build a position on key board issues, and connecting you to more rewarding opportunities. Visit plus.nurole.com to learn more. You've talked already about the value the board played in sharpening your strategy. Where else has the board most helped you scale up as a CEO?
Risk management, commercial risk management in relation to the balance between risks and commercialization, really, really important. And I'll give you one live example in the early years. So in the year, without necessarily naming the client. So in the early years, a major client came into us and wanted clearing services. They had quite a strong reputation in the market for being quite aggressive. Their fin crime policies weren't quite where it should be, et cetera, et cetera, et cetera. And we try to say yes to onboarding, or we'll tell the client what they need to do for us to get a yes to improve X, Y, Z. Anyway, our recommendation in this particular case was they weren't ready and needed to do more work. And the board found that, the investor, directors part of the board found that very, very difficult sorry, we're a loss-making bank. We've got an opportunity here. And you're telling me sort of, no, have we got the right CEO? Chief Risk Officer, the rest. Anyway, we took that. Various things have then happened. The board then congratulated itself later on as more came out. What a wonderful decision that they made. And actually, we roll it on. They're actually now a client of ours and doing very well. But throughout the career, if you like, my banking career, I sort of never felt that trying to do the right thing no matter what. It's better playing the long game than the short game. And that was a definite moment. And obviously to the world in relation to financial crime, sanction screening, it's so easy to get it wrong. And the consequence, the regulatory intervention, costs a fortune and costs you 2 years' growth. Why not get it right in the first time?
I speak with a lot of founder CEOs who do think of their board as just a necessary evil to be tolerated and a pain in the backside rather than something that adds value to them. And it's interesting that the example used there is what a recent guest actually described as a Formula One brake. They said, in a Formula One car, you need blooming good brakes to make sure you can go faster. And it sounds like that,
Yes.
what you've just described there, is having those Formula One brakes in place, and that the board providing that braking service when you as a CEO have got your head down and you're wrapped up in the momentum and just making sure everything is working. It's easy to sort of lose sight of that.
Yes, so much so. And in the noise, the thrill, the excitement, the success, exactly. And cool, calm heads. And indeed, I used to view, and I know throughout my banking career at times, of viewing the board as a sort of gate and something to get through and a process and use the word necessary evil of how can it be more than that? And one of the things that I'm passionate about is of course, all those things matter, but governance. So I remember early on as a CEO going to a McKinsey presentation in relation, and they did this fantastic presentation on boards and governance around the world. And the key message was as follows, that is there a correlation between where boards spend their time and actually growth and success of the companies? And if you looked at Asia Pac and the US, so 50-60% of the time is spent on strategy and 20-30% on governance. In Europe, and the UK, it's all the other way around. And you say Europe are obsessed with governance. And is it wonder then we don't have some of the greatest companies in the world? They should be spending more time on strategy and growing the business. And I found that fascinating because I suspect it's true, especially having grown up in a regulated environment where boards have to spend so much time in relation to governance and regulatory matters. So finding that time on off-site strategy reviews, organising agendas to do all the governance at high standard, but find the time to actually really talk about the issues that really matter, and getting into the true strategic risks of the business and where you're choosing to address those or not, or being aware you've got blind spots and those are deliberate decisions in terms of financial trade-offs or whatever it is. That is real value add in relation to our strategic focus.
So looking back now with the benefit of hindsight, how would you have adjusted the board composition to ensure it delivered maximum value during each of those stages that a chair or founder listening might want to keep front of mind?
I think the one thing which is hard because, again, in a bank, where you have to be approved to be a risk chair, an audit chair, naturally therefore attracts financial accountants, bankers, sort of risk managers, etc., rather than fintech experts or innovation experts or technology experts. How do you find both? Have they got the right mindset? They've always been in big bank land or highly regulated land or been very successful. A startup scale up, the speed that you're actually going at compared to a FTSE 250 or 100 or 500-page board decks and all the resources, completely different. Can you be agile yourself of really the board being very effective, but also being agile, working at pace and proportionate? I mean, one of the things actually we talk about a lot was the speed that the business is growing at, outgrowing the authorities model, empowering down so the board isn't caught in all the approvals because we're starting to hit them because we're growing, but actually moving those up and empowering down so they only focus on the things that really matter. Not doing that when you get there, but actually seeing it forward so you save the time for the horizon and forward planning rather than looking backwards or signing off governance. I think that's certainly something we could have done better.
Talk me through your transition from CEO into the non-executive role. What have you learned from that process that a founder listening, a CEO listening, or a board member listening who facing the same might learn from?
So a couple of stories that, in answering your question, one that happened by accident but was actually quite interesting, and the other one was the more structured sort of formal answer in relation to it, but perhaps the more interesting one. So as a number of CEOs, we're all courted by the big headhunter firms, and relation and use all of that. I'd said no to a particular one because I've been working too hard, and I was feeling guilty and said yes. And I went to this dinner and I hadn't actually prepped, although I was always in forward diary and the rest of knowing it. And it was a group, it was orchestrated, it was a senior non-exec that was a CEO that had just transitioned, and a whole raft of CEOs that potentially are becoming non-exec directors. And the whole dinner was in relation to this. And this was actually sort of 6 months ago. So it was interesting timing. And not breaking any confidences, I'm not shouting out rules or whatever, I was summarizing essentially what happened there. And the timing was very interesting because I was able to use it as a checklist of the things that I'd been doing. But anyway, the CEO that had switched summarized his whole experience. I think it's worth sharing because I found it very interesting. All the other CEOs around the table did as well, and went something like this. You can read all the books, you can do all the analysis. Well, I'll tell you what they all say. I'll tell you what I did. So you need two columns. You need quality of life and sort of happiness in one, and you need purpose in the other. And so I'd worked out all the things that I'm going to do. My family, I never had time to do, and the rest, and purpose. So I worked out I would try and get 3 non-exec directorships, and I'll do a charity because then I'll be giving back, and that would be the right balance. And so I went out there and I worked really hard. And so my scorecard, unfortunately, I've not done terribly well. He said I started as non-exec on the board, and I was soon made chairman. They all have the year end. So unfortunately, same year end. So unfortunately now I'm working extremely hard in March and April. On the left-hand side of the sheet, my wife is now very unhappy because I'm working full-time as chair of all of those, and it was never the anticipation. In relation to the charity, I've had to give it up because it upset me too much, and we're all listening intently. Unfortunately, the caliber of individuals that run charities are perhaps not the best. I'm quite impatient and KPI driven, and they don't get anything done and didn't achieve the KPIs. So I had to opt out. So that strategy hasn't worked very well. But what I have learned is that I still need the intellectual stimulation. I may not be doing the day to day, but in terms of strategy, of people, of regulation and thinking outside the box, the non-exec, the chair roles are giving me all of that. And if I'm contributing, I'll keep doing it. But I needed that in that I couldn't, as we all know, in going from 100 miles an hour to 0, I will be in a box in 3 weeks or 3 months. And I'm having to manage myself in that you're the center of attention, you're in control, you're in all the flow, you're in all the decisions, and you are essentially the funnel from the company through to the investors and the sort of board. And suddenly you're out of that. But actually you learn to enjoy different things. Otherwise, you cannot let go. The last part he did talk about, which I'm very fortunate about, is we've worked hard on the succession. Who is your successor? And we've got a UK CEO, we've got a group CEO, we've got a fantastic team, and they'll take it on to another level. And if you like, my mantra as always, I'll do my stint, but I want to hand it over to someone I'm sure that's far better than me and take it on. As long as it's sustainable and it's created something of value, I'll be very, very happy. So I think it is tough, right? If you give, we all talk about work-life balance and everything else, right? As CEO, there is none. You've given up your life. You're on call all the time. It doesn't matter. And so on the basis of that changing, it's a massive change. But you need to learn to enjoy what's important to you in your life, rather than your life or your being is dictated by your job title, right? And a lot of people can't make that transition, but it's very difficult.
And what's the value that you try to bring now as a non-exec in ClearBank, where you've been the CEO and clearly know your successor very well as they worked for you as the CFO?
Coach, mentor. The thing I've enjoyed about right at the start, my chairman, right at the start, giving you a different perspective. not telling you what the answers are, but on a one-to-one coffee chats, have you thought about this? What about that? Wow, that's in it. No, I hadn't. Oh, I'll process that. Nothing worse than an interfering founder, CEO. That if only they were running a company, it'd all be so much better, right? Oh, impossible. Right, so I'm desperate not to be that. But they want advice or spending time in, right? And so one of the things in getting better as a non-exec director, the caliber and quality of questions that you ask, how you ask them, when you ask them, and actually, not telling them necessarily the answers, it isn't the job, but actually working on the work to working it out. That's a real skill, I believe, to add value rather than nitpick or a governance point or whatever it is of being a pain in the arse.
So as you look back now over that journey, if you imagine there's a founder CEO listening to this who's trying to figure out their board and right now feels like they're not getting value from their board, what's your advice for them?
If I was a founder CEO and don't think it's working, right, have we got the right leadership? Are we spending the time on the right thing? Are we boring stuff, right, in relation to it? And then, have you got the inputs that you want? Is that coming from consultants or other people and not the non-execs? And do that analysis and be brave and make some incremental changes. If you've only got a few, the chemistry, personality, content, it's amazing, right? Again, as CEO, you don't want yes people or rest, but you want positive energy. I don't mind if something's wrong, as long as there's some people to say, this is important, let's do this and give it a go and make it better. That you also want that in the board, right? Of everything's wrong and demotivating the exec because they're not succeeding, etc., etc. Yes, there can be some of that, but how are you helping them get better? If you're not, then again, there's got to be energy and passion and commitment. Chairs going to client events and actually being a sponsor of the business and engaged in the business, right? Doesn't mean to say they've lost their independence. I expect that of a non-exec. All right, if you're going to give up your time, then do it. And you should want to do that. Have you got those people on board?
It's fascinating. One of the insights for me beyond the most boards are dysfunctional is that actually to make a board functional is not rocket science. There's some really boring, simple stuff you have to get right. And it's on the back of that, we created this pulse survey tool that effectively allows boards to survey all their board members and hold a mirror up to themselves and just run through a checklist of these are the things, how are we doing across these measures? And it becomes very clear when you do that and you benchmark yourself against your peers and the broader sort of universe to see where you're falling short. And exactly as you say, it's basic things like, have you got the right chair in place and are they truly sort of inspiring that group to be better? So
but also, when was the last board effectiveness review? And did actually all the directors and everyone honestly answer the questions? As you said, you should only have to read that to then know the board's not effective. Anyway, do carry on. It's very good advice. It's so it may a necessary evil when it's working and adding value. It makes a difference.
Charles, time has flown, which means it's time for the lightning round, where I'm going to say a short question and ask you for a quick response if you're ready.
I'll give it a go.
Most impactful question you've heard in the boardroom?
There's been a few on really out of the box, came from the chair of a risk committee or an audit committee strategically in relation to the business of, have you thought of a car as a payment device? Have you thought of a city that could issue its own payment coin or a stable coin to actually fund? There's people I would not have expected in the commercial side to come up with those things on a strategic offsite away from the governance and the structure of actually contributing as a team in relation to an outlier thought.
Boardroom behaviour that irritates you most?
Pettiness over governance issues.
Most valuable board ritual?
The annual strategic offsite.
Your favourite quote?
Rome wasn't built in a day.
What have you changed your mind on about boards over time?
Value add. In my executive career earlier on of going to boards were things that had to be done. We were after an outcome. You had to convince them all on risks and controls and financial cases and. It was something to get through. As I've matured and understand more, and obviously the ClearBank journey where you need everyone, right? Of not thinking you know it all, right? Learning those other perspectives or stronger together in relation to it. And therefore, and they've all got critical roles to play.
When was the last time you got a significant judgment call wrong in the boardroom, and what did you learn?
People, hiring, and spent a lot of time. How do you narrow the odds to win better? And private equity in relation to using psychometric testing. You know, a fallacy. The more board members and more people that an individual see, the better the decision. The data is that is not the case.
How are you better today as a board member than when you started?
It's the way and how you ask the question. You get a much better answer. And doing that at pace and speed to actually, and knowing where and when.
And finally, 3 things our listeners should take away from this episode if they take nothing else.
Balance between governance and commercial. Coming back to that McKinsey survey, where are you spending the right amount of time? The regulators may expect you to spending 90% on governance, managing all your stakeholders that the board's responsible to. Have you got the balance right? So many boards spend far too much time on governance. That may be a way it's all set up and managing one's own personal risk or whatever. How do you break that mold to actually get strategic added value as well as do the governance well? That would be number 1. Number 2 was my empower down. Startups, scale-ups, things change. The role of the board and where it spends its time and all the authorizations, policy approvals, all the driving that and getting ahead of it so it's to the right level rather than being caught within it. But it's taking away time away from the business. Have you got that right in relation to sort of scaling? And sorry, the last one, of course, is the team leader. Have you got the best chair that you can get?
Charles, thank you so much for taking the time to share your experience and wisdom.
Absolute pleasure. Thank you for all the challenging questions, and I hope your audience gets some value out of it that I certainly have in listening to some of the others. So thank you for inviting me to share.
If you want to feel fully equipped for board conversations, with expert guidance supporting you, Nurole Plus can help. As a listener, you get 10% off. Head to plus.nurole.com and use code ENTER at checkout.